Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look at Activity 5, Return Financial Indicators. You are presented with the financial information from Block Limited for the year ended 28 February 2022. The company has an authorized share capital of 2.5 million ordinary shares. This means this is the maximum shares available. When we look at what is required, we are going to look at each and every single question individually now. This is a type of questions, or these type of questions is what you can expect in an exam or in a test. You are provided with an extract from the balance sheet on 29 February 2022, and take note that there is question marks. That means that we need to solve that. Information B, they provided you the information with regards to shares, and number C, financial indicators. In question 1, we need to complete the ordinary share capital note and the retained income. This activity, we're going to look at how do we use financial indicators to find missing figures. So where do I start? Remember now, authorized is the maximum of shares that we've got available. On the 1st of March 2021, 60% of the shares were in issue. So if we've got 2.5 million, which is maximum, and we times that by 60%, it means that we've got 1.5 million shares in issue on the 1st of March 2021. My retained income were given to me, but now my ordinary share capital is a question mark, which means that we will need to solve that. So how can I solve this? If we look at 2021, the net asset value per share were given to you. To calculate the net asset value per share, we have to take our shareholders' equity divided by the number of shares in issue. So I want to calculate the shareholders' equity. They provided for me, or we've just calculated the number of shares in issue in the beginning. The closing balance at the end of last year is my opening balance this year. And they provided to me the net asset value per share. This means I can use this financial indicator to find the shareholders' equity. So shareholders' equity, which is X, divided by the number of shares times 100 equals 878,1. Sorry, 887,1. So it's all about solving X. This will provide us with the total shareholders' equity. And once we've got the total shareholders' equity, we can subtract the retained income, and that provides us with the ordinary share capital in the beginning. On 1 June 2021, 50,000 new ordinary shares were issued, so they didn't provide us with the amount per share or the total. They only said to us 50,000 shares were issued. On 28 February 2022, they provided us with the number of shares in issue at the end. And if we look at information A, the extract from the balance sheet, they provided us with the total ordinary share capital. So it's all about filling in the information which we've got. Now we can find the missing figures. On 30 August 2021, ordinary shares were repurchased at 45 cents more than the average share price. Remember, the average share price will always be in your ordinary share capital note. The difference, the amount higher than the average price, will appear in the retained income. These shareholders do not qualify for final dividends. So I know now that we have decided to repurchase shares. So this I will need to calculate because they didn't provide it to me. So to calculate it, what if they've given us, what if we've done to this point? We've calculated the balance in the beginning. I know that 50,000 shares were issued and the balance at the end was given. So the difference is 360,000, and that is the ordinary shares that were repurchased on 30 August. But now we need to calculate the average price. So how do we calculate the average price? To calculate the average price, we can use the balance at the end divided by the number of shares in issue. Why do we use the balance at the end? Because on the 1st of June, 50,000 shares were issued. This means we now need to use the balance at the end. So once we've got the average price, we can calculate the total repurchase price that will appear in the ordinary share capital. Remember that it must be in brackets. Now we can find the missing figure, which is the ordinary shares issued on the 1st of June. So we're working backwards. So we start the balance at the end, it's opposite calculations, minus plus equals. When completing the retained income note, make sure that you know your note exactly how it works. It's always the balance in the beginning plus the net profit after tax minus repurchase of shares minus dividends on ordinary shares, which consist out of interim plus final dividends recommended. In this case, they haven't given you interim and final, which we'll have a look at a little bit later on. And then we've got the balance at the end. So to complete the retained income note, we start with the balance in the beginning. It was given to you. The repurchase of shares, we've calculated that 360,000 shares were repurchased at 45 cents above the average price, and that is the amount that will appear in the retained income note. To solve the net profit after tax, I can use my financial indicator, my earnings per share. Why? Because if we look at earnings per share, it's my net profit after tax divided by the number of shares in issue times 100 cents. So we want to calculate the net profit after tax, and we're going to divide it by the number of shares in issue, which is given to you on 28 February 2022. So again, this is all about solving X. Now we can calculate the net profit after tax. To calculate the dividends on ordinary shares, I still got two unknowns. I've got the balance at the end, which is a question mark, and the dividends on ordinary shares. So again, I can use the financial indicator dividends per share to calculate the dividends on ordinary shares. Why? Because dividends per share consists out of dividends on ordinary shares divided by the number of shares in issue. So again, I want to solve X. So to solve X, we need to get X alone. So we take 94,3 and we need to times it by 1,190,000 divided by 100, and this will provide us with the dividends on ordinary shares. Once we've got the dividends on ordinary shares, we can calculate our balance at the end of the accounting period. To calculate now the net asset value, we have to take the shareholders' equity divided by the number of shares in issue. So from question 1, you've completed now the ordinary share capital, note, and the retained income. This means we're going to take the balance, ordinary share capital, plus the retained income divided by the number of shares in issue. Or if you look at the information that was given to you, there's your shareholders' equity, which we've calculated, ordinary share capital plus the retained income divided by the number of shares in issue. Again, your answer must always be in cents. Looking at the return on the average shareholders' equity, it's my net profit after tax, which we calculated in the retained income note, divided by the average shareholders' equity. So it's beginning plus end divided by 2. Your answer must be in percentage. Third question, calculate the price at which the company repurchased the shares on 30 August 2021. So this means this is my total outflow of cash. This is the amount that will appear in your cash flow statement. What is the total that we've paid? So we've purchased 360,000 shares. To get the total, we take the ordinary share capital plus the amount in the retained income. Or you could have said 360,000 times the average price, which was $7.95, plus the amount above the average price. And this will give you exactly the same answer. Question 4. Comment on the dividend payout policy. Explain why this is an irresponsible change in the policy. Provide 2 points. Now remember, dividend payout policy, we look at our dividends per share divided by the earnings per share. What percentage do we retain and what percentage did we pay out in dividends? So we need to calculate this now. So for 2021, we took the dividends per share divided by the earnings per share, and we did exactly the same for 2022. So if I compare the two, I can see that in 2021, 60% of the dividends were paid out, which means 40% was retained. 100 minus 60 equals 40. But in 2022, it was 115%. We paid out more in dividends than what our earnings was for that financial year. This means that we actually took some of our surplus funds in our retained income. So when we're commenting on this now, always use the percentages. Indicate that the dividend payout rate increased from 60% to 115%, and make sure that you show your calculation. This could be that the directors attempted to please the shareholders for low profitability to compensate them by using funds retained in the previous financial year. Because if you have a look there, you can see that our earnings per share is much less compared to last year. They paid out 60% of the earnings in dividends in 2021, which means that they only retained or they've retained 40%. In 2022, there were no earnings that were retained for future growth. They paid out more dividends than the earnings per share in 2022, although the earnings per share dropped from 114 cents to 82 cents in 2022. If you look at the dividends per share figures, you can see that there's an increase from 2021 to 2022. When commenting now on the percentage return on shareholders' equity, remember to use your answer that you have calculated and quote the figures. Indicate the trend. So if we compare 2021 with 2022, we can see that there's a drop. Although there's a drop, what do we compare it to? We compare it to alternative investments. So if we compare this to alternative investment like a fixed deposit, this is very low, 8.2%. A shareholder feels that the earnings per share is better compared to 2021 and the dividends per share is a concern. Explain why you agree with him. So when we're looking at this, we are going to look at the earnings per share as a percentage on the market price. Yes, if we look at the earnings per share just on its own, the earnings per share decreased from 114 cents to 82 cents. But now let's see what happens when we compare it to the market price per share as a percentage. To calculate this, we take for 2022 and for 2021, we take the earnings per share divided by the market price. And now we compare the two percentages. So if I have a look at this, yes, the earnings per share percent decreased, but looking at the percentage on the market price, there was an increase from 9.5% to 10.25%. So to comment now on this, make sure that you show your calculations and use the figures in your answers. By saying in short bullet form, the earnings per share dropped from 114 cents to 82 cents. But if we look at the earnings per share as a percentage on the market price, it increased from 9.5% to 10.3%. With dividends per share, we're going to now look at exactly the same. If we look at the dividends per share just by comparing 2021 with 2022, I can see that there's an increase. But we are going to look at what was the dividends per share as a percentage on the market price for each year. This is what we talk about, the dividends yield. So to calculate that, we take the dividends per share for 2021 and for 2022, and we divide it by the market price for each one of those years. So when we're commenting now, we're going to start with the dividends per share increased, and you make sure that you quote the figures from 68 to 94.3. So it's from 68.4 to 94.3, which is a 37.9% increase. But if we look at the dividends per share as a percentage on the market price, you would take note that it also increased from 5.7% to 11.8%. If we're looking at the market price per share, what happened to the market price? From last year to this year, it dropped from 1,200 cents to 800 cents. So what does all of this mean? If we look at the dividends yield, it is very high compared to 2021. The payout rate could be unsustainable, or that investors are selling their shares, driving down the share price, and it's clear if we look at the market price. Question number 7. Comment on whether the shareholders should be satisfied with the market price of their shares. Quote 2 relevant financial indicators, actual figures, ratios, percentages, and their trends. Give an additional comment to support your answer. Starting with the market price. What happened? The market price decreased from 1,200 cents to 800 cents. When we look at the net asset value, make sure again that you use your answer that you've calculated in the previous questions and compare it to 2021. If I compare 2022 with 2021, you can see that there was a slight drop in the net asset value. If we now compare the net asset value with the market price in 2021, it's clear that what happened there, the market price is higher than the net asset value, which means that there is still a demand for the shares. It is popular with investors. But if we now look at 2022, the market price is now below what the shares are actually worth. So to conclude this, our earnings per share dropped. Our dividends per share increased. Although it increased, it wasn't very popular with investors. It had an effect in the market price that was dropping. Looking at our last question, question 8. Comment on the price at which the new shares were issued on the 1st of June 2021 and on the price at which the shares were repurchased on 30 August 2021. Explain quoting figures and appropriate financial indicators to support your answer. So when we're looking at this type of question, we always compare it to the average price, the net asset value, and the market price. So looking at the new shares, it was issued at the average price of R7.95. How did we calculate that? We took the 397,500 divided by the 50,000. This is below the market price at 800 cents and below the net asset value. The company would have gotten more if they decided to actually sell it on the JSE. When we now look at the price, the repurchase price, the shares were repurchased at 840 cents per share. This is more than the market price per share of 800 cents, but it's below the net asset value of what the shares are actually worth. So when we look now at this activity, what is very important to remember? You will be provided with financial or with a formula sheet, but you need to make sure that you know your financial indicators and you know exactly where to use it, because this is the biggest problem. If you look at the questions which we've done and you do not know which financial indicators to use, you're going to lose all the marks, because you need to quote the financial indicators and then you need to comment on that. So if you don't know which financial indicator to use, it means that you're going to quote incorrect figures and comment incorrectly. So thank you very much. I want to leave you with this quote. Motivation is what you get, what gets you started. Habit is what keeps you going. In our next activity, we are going to look at a next financial indicator where we look at our financial risk and gearing. I hope you have a wonderful day.